Trading is an art. Trading is science. In this video, I'm going to speak to you briefly on what momentum is and what momentum trading is about. Before anything else, as usual, we'll look at our disclaimer for once. Momentum is the high risk, high gain strategy. How are you all feeling today? Today is the 30th of August, and thank you for joining me. I hope this video will help you in another presentation of mine. So before we proceed further, let's look at two laws that I want you to know. One is the law of momentum. The law of momentum states that is directly proportional to the object's mass and also its velocity. Here, how I relate this law to the stock trading is that the object mass is actually the volume and the velocity is the price. And velocity meaning is speed. So there is a speed in the price movement. So normally what momentum is actually, momentum is the acceleration in the price that can be so explosive. This is due to a couple of reasons, because momentum can take place on few reasons. That is number one, it could be due to the reported earnings that's going to be announced soon. Another reason could be the news, impending news. It could be due to some sentiment, and also greed and fear. In this context, the fear I'm referring to is the fear of missing out the trade. So usually what happens is that when momentum takes place, is that big buyers will come in at various points of the trading hours, and that push the price movement of that particular asset or that particular counter. So usually these explosive moves of these counters are coupled with high tempo buying, and it's usually done by the big boys and institutional banks and so on. So here, the point to note here is that do not mistaken with what you call trend trading, because trend trading also uses volume breakouts and price breakout as well, but it's coupled with moving averages, dual moving averages, or dual EMS, exponential moving averages, coupled with some other indicators like MACD, RSI, and so on. And the most important point to note here is that trend trading will move systematically, and also it can last up to few days to few weeks and up to few months or even a year. Whereas the momentum usually lasts from few hours to few days at the max. In certain cases, I've noticed it can last up to 10 trading days. Alright, I will move on to another important law, which is one of my favorite law, Newton's first law. A body in motion will remain in motion unless it is acted upon by an external force, acted upon or exerted upon by an external force on a movement or on the motion. So here, I would like to illustrate with two good examples using this law, and how you can use this law to understand your trading style, and also how this law can help you to get rid of the fear and get rid of the panicky situation when you face certain external force acting upon on the market or individually on a particular counter and so on. For this, I'm going to illustrate with you with two examples. Let me open up the chart here. Okay, the first example here is that let's look at Supermax. As you can see here, Supermax was trending up all the way as early as from May to June and June. So here, as you can see here, a big red candle. They call it I call it the kangaroo candle. Normally, kangaroo candle is an opportunity to buy. What happened was that this happened on 14th of July. On 13th of July, what happened is that on that very evening, the IB, institutional banks, they announced that they are going to do capping for the glove counters. And the very next day, what happened? Greed and fear took place. The fear and the greed, the panic, the people who panicked started selling off the counters. And then what happened? This particular stock was in solid motion, trending upwards. And then this is the external force acting on the particular counter, not individually but collectively to all the health-related sectors like the top four, like Kosan, Hatta Lega, Top Glove, and so on. So what happened was that due to the capping announcement, people started throwing the selling, and then what happened? The price start to be whacked down all the way. So sooner or later, what happened is that it lasted for 1 or 2 days. At the most, it was 2 days. After 2 days, what happened is that the big boys were started buying. It was an opportunity for them to get in the bandwagon as well. It was an opportunity for those people who missed out the earlier trading, missed out the earlier trend. So this was an opportunity for them to get into the bandwagon to ride that jolly ride. So this is a demonstration of an external force acting upon a counter which is in motion. All right. The second example here, I'm going to show it to you, is let's focus on focus. Yeah. Here you go. Focus dynamics. As you can see here, and somewhere in middle of July, what happened? There was some explosive move on focus, and as you can see here, it was trending up below 45 degrees. Normally, momentum counters trend up below 45 degrees. That means in the range of 25 to 30, 35 degrees. Normally, a trending counter, a solid systematic trending counters will move in the system in a degree of 45 degrees to 50 degrees and so on. So what happened here, as you can see here, there was an external force took place on 8th of July. On 8th of July, what happened on that particular day was that on the 7th of evening, Bursa inquired about the unusual market activity. UMA. So what happened on the 8th of July? People panicked, traders panicked. They started trading the counters because there was no news, there was no impending news to be announced at that time. And so what happened? There was a halt. This is what I call external force acting on the counter which is in motion. You get the point here? And it was also another solid opportunity for traders to get into this bandwagon as well. And after that, what happened? It started moving in a more trending style of market. Trending style of market. You see? So what happens? And then it's still in motion and it still looks solid, but it happens to be looking like it's a bit weakening here. Anyhow, what I want to relay here is actually how these two counters actually to demonstrate to you on how this Newton's law, you can relate Newton's law to your trading style. And after knowing this law, it certainly helped me in my trading style. You know, it helped me to get rid of your fear and so on. I want you to understand these two laws. It will be helpful and helpful in your trading Now let's move on to the next slide. So the requisite, usually what happens is that in momentum, I look at three key factors, I look at the three premises. This number one is the volume. We need volume. As a momentum trader, you need to look for counters which has got solid volume, which is trading at 1 million shares during the first 15-20 minutes of the trading hours. Volume is very, very important, because as a momentum trader, you need to get in fast and get out fast. Usually, but you can't do that so with illiquid counters. You need a super volume on that particular counter. Number two is the time frame. Time frame is very important. You look at a shorter time frame. The bigger time frame may be on an uptrend, or it could be in a downtrend. It does not matter. You look, this is momentum trading. It happens trend within the trend. That means within the major trend could be in an upward trajectory. What happens in between the major trend, you'll have a minor trend, and in between the minor trend, you will also have a micro trend. So for you to understand this further, you need to know your Dow Jones theory. And if you study the Dow Jones theory, it teaches you the 6 tenets of the Dow Jones theory. If you understand that, so you will understand the whole concept behind the momentum trading. Number three is the volatility, the big price swings. You need a big price swings. That means usually it will range from 3 to 15% to 20% usually. But in the current trend, in the current market, we are looking at counters up to 30%, 60% gain in a day, and we have even seen counters limit up, and so on. So what is important here is that big price swings will be there naturally when it comes to momentum counters. So anyway, looking at that, I'm going to show to you what happened on last week. I'm going to speak to you, show you 3 good counters for the performance for the last week. Let's look at the diagram. As you can see here, what Bintai. We'll start with Bintai. Okay, as you can type the search in the search button up here in the Telegram group in my channel. For those first-time viewers who are not familiar, please have a look at. Please look at my first video if you have the time. I have covered about this aspect on it. It's called the volume shockers, and it will be helpful to you. And as you can see here, Bintai started to appear on 18th of August under volume shockers list, as the counter was ranked number 1 with 24 cents and so on. And come 24th August, it slowly moved into the momentum here. Look here. It was generated in my momentum trading list automatically. And while you are there, you just look at the observe solution, and I'll be talking on solution as well, as So what happens is that, and then on 25th August, it appeared again on the volume shockers, as well as it ranked number 1 in the momentum trading list. So next we look at solution. So on solution, it started to appear as early as 4th of August on the volume shockers list, which I've given as early as at 13 cents. This when it happened on the volume shockers list at 13 cents. And then the next thing that you know that it start appearing on 21st August, 24th of August, 24th of August, it appeared here at 63 cents, perhaps 21st August. Yeah, so it appeared here on 24th of August, and then it start to move, all right. And then what happened is, another example I want to give you is open system. Yes, open system on 25th of August. So 24th of August. Yeah, 24th of August, it appeared at 109 cents. On the very same day, it touched 1 ringgit 32 cents for the same day. That was an explosive move. That is what momentum is all about. So here is what solution that I missed out earlier. On the same day, solution also was doing at 47.5. And it went on to perform better after 1 or 2 days later. So that's what happens is that usually my list is the two type of list. One is the volume shockers. The next list is from volume shockers is your first level of understanding that it will come slowly. The counters will be propping up into my momentum list. So momentum list will be the list where it generates counters that is about to move. So the momentum trading list that I generate every other day for the last 2 years or so, it has been giving up good candidates, good counters for trading as well. So it's an all-weather trading style. When you look at the momentum trading style and the momentum trading list that I generate, it's an all-weather. It works in all-weather condition. It works like a Swiss watch. Yeah. So it's, be it a good year or bad year, every other year other than this year, even if when you look back in the last 1, 2 or 2 years, there will be always some darling counters propping up in the list. There will be usually around 90 to 120 counters throughout the year that will be popping up in the list, and these will be the counters that will be performing very well from month to month, from throughout the year whatsoever. So momentum trading is a high risk, high gain strategy, but I believe I've given you some things to think about today, and I believe I've given you something to digest. If you do not really understand, keep listening to these messages or view this video a couple of times until you understand, because as they say, the repetition is the mother of all learning skills. So the more you look at it, the more you listen to it, each time when you listen, you will learn something new. So momentum trading is all about, it's a high risk, high gain strategy. What is important is that you have to make sure you have the right price entry. That's very important. Unlike the trend trading, it will tell you, it will give you a pullback. It will give you an opportunity for a pullback buy, usually like using what you call 10 days moving average falling back to 20 days moving average, or the 20 days moving average falling back to the 50 days moving average. That is your pullback buy. And whereas in the momentum trading, you don't get that kind of opportunity. You only look at since you're looking at a short-term trend, so you look at maybe a 30 minutes chart or 1 hour chart or 4 hours chart, and the last bar will determine your price entry. So plus or minus 3 bits from the closing of the bar in that particular 1 hour or 30 minutes will be your entry price. Make sure you have to have a proper stop loss for this as well. This is very important. At the same time, you have to let your profits run high. You can have a pre-targeted price that you can key in and you just wait. That's it. So momentum trading is a game for the masters. It's not for the newbies. It's not for the novice. Do you have what it takes to be the master of the game? Do you have what it takes to be the master of momentum trading? I'll see you in my next video. Until then, since today is the 30th of August, I wish you all Salam Merdeka, Happy Merdeka. Have a good Independence Day. Make sure you keep the Malaysian flags flying high. Make sure you keep the flags flying high. I'll see you in my next video. Thank you so much. Have a wonderful day. Bye.